Bitcoin has seen an explosive rally over the last few weeks, resulting in a push towards a yearly resistance sitting between $28,000 and $30,000. However, on the smaller time frames, there are indications of a rejection and reversal in play. We're going to go ahead and discuss those and talk about the potential for a pullback. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning into another video. I hope you're all having a fantastic day today. We're here to discuss Bitcoin's price action in relation to the $28,000 to $30,000 major yearly long resistance. This resistance is depicted by that red box on the chart, as you can see over here, which represents once more that yearly resistance. In fact, it is the bull market low of the prior cycle. This is an incredibly important resistance level that Bitcoin needs to break above for us to enter a bull market. And we'll briefly touch on that when we get into the video. But for the main part of today's video, we're going to go ahead and discuss the short-term price action, the technical data, and the technical indicators. We'll discuss the probability of a rejection from this major resistance, because resistance is resistance until it is not, and the potential targets a rejection could take Bitcoin to. We'll also go over the market data and traditional markets now that the markets are back on. So let's go ahead and get into it. Before we do, smash the like button, hit the comment button, subscribe to the channel, guys. We do daily videos on Bitcoin. We focus on the data, the facts, the charts, no emotion, no opinion, no bias, guys. We only basically translate what the charts are telling you, and we give you the statistical probabilities handed out on a golden platter. You can find us on Telegram, the second link down below, guys. This will give you access to updates, charts, analysis, videos, information, educational posts, news events, news releases. Like I said, all of our videos and so much more. If you're interested in joining our VIP channel, you'll get access to our trades. We have a main channel, which of course we post all of our VIP trades in. This is our main channel over here. And again, all of our videos, etc., etc. Every single trade has specific entries, targets, stop losses, everything in between. You also get access to our group chat, where we have 3 sub-channels. We have our trading and charts, we have our general chat, we have our help chat, and so much more over, guys. All of our VIP members are in there talking on a daily basis, talking about trades, setting up trades, etc., etc. So you can get access to that by clicking this message over here, contacting me over here, or finding more membership information and trading track records over here. Let's go ahead and get into the video, starting off with, of course, the market data. Currently for the month, we are 20 days through March. We are up 18.16%. Again, a lot of this month movement was as a result of the aggressive and very quick 180 the Federal Reserve did in relation to QE, and more importantly QT and money printing as a whole. They've decided that they're going to bail out the banks, and as a result they're going to have to print money. In fact, they have already printed $300 billion to help these banks and bail out the banks. And as you already know, guys, if you're printing money, you can't possibly ramp up interest rates at the same time. It's contradictory, right? So of course, knowing that money will generally flow out of the US dollar as it loses value, as more money gets printed and into assets where the money can hold its value, if not grow. And that is what we've seen. We're seeing the narrative in the market shift from we're going further down, inflation's rising, interest rates are going to continue upwards, to we're going to pivot, money's coming into the market, asset prices are going to boom, and banks are wrecked. So we're kind of in this weird zone. And the FOMC meeting comes out in a couple days. I believe that is in 3 days now off the top of my head. And that is going to be a massive, massive news release. And it's going to absolutely shift prices in the market, either toward the upside or correct them toward the downside to where their true value should actually be sitting at the current moment. And again, guys, if they do bring out 50 basis points, that is going to be contradictory to their actions and what they've been saying over the last few weeks. So I don't think it's likely. If we look at what the market expects, we're sitting around a 65% probability or expectation for 25 basis point, which would make more sense in regards to their actions and what they've been saying publicly, and even what they've been doing in terms of money printing. And that would be more sensible for the Feds to do. And I don't think a 50 basis point hike is likely, but if it does occur, I do believe the markets are going to tank. Anyway, moving on from there, guys, looking at the liquidity, we can see overall 24-hour volume is up 10%. And 24-hour liquidations are up 7%, both of which are sitting quite high. 141 million for liquidations is generally high, and 24-hour volume sitting over 100 billion, again, is not considered low. It's not considered massively high, but it is definitely in that higher end. 30-day volatility is on the rise, 3.46 obviously expected as the price continues upwards. And of course, 6-day volatility on the rise, 3.18, potentially finding points of resistance here as Bitcoin reaches a major resistance. We could see some pullbacks in volatility overall on the charts. Moving on from there, guys, we can see liquidations have kind of been all over the place. In the last 24 hours, you can see liquidations are here. We've had some massive liquidations on longs over here, guys. Absolutely getting slaughtered. Of course, we'll come back to that in a second. And of course, we've had some chop zones occur within the price action, liquidating both shorts and longs. But again, longs have really been getting slaughtered as we've approached that $28,000 resistance. Again, as we approach resistance, longs become less and less favorable. People taking longs at 28K are taking late longs. Let's go ahead and get into the DXY. DXY is currently at support again. We don't really anticipate too much from a DXY today, and I definitely am not going to sit here and try to predict a DXY because FOMC is going to completely change DXY's price action and shift it in ways that we can't possibly imagine right now. So it is completely determined upon what they do with the interest rates. If the interest rates come out less favorable, DXY will rise. If they come out favorable in terms of lower interest rates, DXY should plummet, and that will bring the US dollar down, and that will drive asset prices upwards. Looking at the Dow Jones again, guys, we're having nearly a week of indecision here at support. We've been sitting at the support for nearly a week, and again, it is really holding out for FOMC. It's really holding out for the next decision. We don't expect too much to occur until we get FOMC, but if we do lose this support level here, we can expect a continuation downwards to retest this downtrending support. If we do expect a bounce here, we can see a bounce towards our up resistance, which is 33,000 S&P 500. Same thing, guys. We need to come over 4,000 here to see a rally up to 4,075, which is this resistance zone. Unless that occurs, we will see a continuation back down into this lower range. And again, if the Feds hike those rates, we will definitely see a pullback on the S&P 500 and again for Bitcoin. So a lot does rest on the next 3 days. The next 3 days are going to be very important, particularly on the third day when FOMC comes out. The market is going to be reacting quite volatile, and it's going to be a very not only important day, but a very descriptive day in terms of what the market can expect going forward for the next 4 weeks. And it's definitely something that's going to help shape the overall narrative and the perceived systematic risk in the market. And again, those two things of what kind of drives asset prices over the next few weeks. So let's go ahead and jump into Bitcoin, guys. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay, guys, so as you can see, Bitcoin has reached a $28,000 to $30,000 major resistance. I'm going to go ahead and quickly bring up a chart we're discussing in the group chat and on the channel a few days ago, which is, of course, this chart here. And this chart here represents the major trigger zones and major resistances within the current range for Bitcoin. As you can see, guys, our major bullish trigger was a 25.2 to 24.8 resistance level. When we broke above that level, we technically entered a bullish move. This was a bullish extension move of the current 250 to 270 day resistance we were trapped under within the periods between June and, of course, March from 2022 to 2023. We broke over that level. We entered a low resistance range represented by the VRPV, suggesting if we broke into this range here, we'd have an increase in volatility, increased speed, and increased velocity in price action, which would drive the price up quite fast to the next resistance, which was 30,000 to 28,000. Exactly what we expected to occur did actually play out on our charts. As you can see, we broke through our trigger zone. We went into this bullish phase, this bullish territory with lower resistance, and we rallied quite strong. However, we are now sitting at a major resistance. So When we are at resistance, we have to be looking for signs of reversals, guys. Looking for signs of reversals, looking for signs of pullbacks, and looking for signals that this uptrend is going to be exhausting. And what do we have? We have one of those signs. We have a rising wedge formation developing on Bitcoin, and I better actually show you on this chart over here. It'll show you a little bit more clearly. As you can see on this chart, at resistance, we have this rising wedge formation developing right at resistance. And you're probably thinking, Whale, what does this even mean? Well, a rising wedge formation, guys, is a visual representation of three things: decreasing momentum, decreasing speed, and decreasing velocity of price action. Momentum is a leading indicator of price action. Price moves according to the momentum of a trend. If the momentum is falling, we generally see the price continue down or come down. If the momentum is rising, we generally see the trend gain strength and continue upwards. So this visual representation, this structure we have over here, the key takeaway is every single structure tells a narrative, every single market structure and pattern tells a story. This particular one is telling us we are in an uptrend that is losing momentum, losing strength, losing speed, losing velocity at resistance, and therefore it is technically weakening. The uptrend is weakening. Now we'll come back and talk a little bit more about this in a second, but I want to divert back to the $28,000 to $30,000 resistance and talk to you about why it is so important. So why is $28,000 to $30,000 resistance so crucial? If we take a look at prior cycles, and I want to go ahead and actually delete everything off this chart and show you our yearly lows. So our yearly lows of this cycle is going to be around 30,000. We'll go ahead and draw that line. We can see a $30,000 line in here. The prior cycle we saw was around 6,000, and the cycle before we saw it was around 351. What we can notice on this chart is every single time after we make a bottom, okay, we make a bottom and we push a monthly candle above that prior yearly bottom, which is going to be the bull market bottom. This is our bull market. That is the bull market bottom. We generally never ever close a monthly candle back below it. That indicates it is the first initial trigger point of the bull market starting. So this is why the 30K level is so important, because it will trigger a bull market to begin. Okay, super important stuff. So if we reject from 28 to 30K on a higher time frame, we do not push back above it. That could be potentially damaging for the 4-year cycle. Now, I do not believe that is what's going to occur. I definitely believe we'll push above 30,000, but I don't think it's going to happen immediately. I think we're going to see some pullbacks. I think we're going to see some resistance and rejection at 28 to 30,000. Even if we don't, it is logical to assume we will, because of how strong this resistance zone is and how critical it is, and currently how a short-term price action is playing out. On the larger time frame, there is absolutely no doubt we are bullish. If we go back to this chart, guys, this chart over here, there is absolutely no doubt we are bullish. We are in the bullish territory, right? We are above our major bullish trigger support or resistance, which is 24,800 to 25,200. We are above the 50 EMA. We're above the 200 moving average on the weekly. We have closed a weekly candle above the 200 moving average, and we are above the 300. There is no doubt that we are bullish. However, we are not in a bull market. I really want to make sure we understand that. We are bullish, but we are not quite yet in a bull market. We still need to gain a little bit more strength to trigger that bull market at the start. We talked a lot about that yesterday. If you want to find out more about that, watch yesterday's video. We discussed the bull market in a whole heap of depth, and I highly recommend checking our video out. So let's go back to this chart over here, guys. We are technically in a rising wedge formation. We discussed what a rising wedge formation means and what we can expect. So where would a breakdown from this level take us, and what key levels do we need to hold above to keep the overall bullish trend alive? So let's talk about that. On the higher time frame, guys, we have gone ahead and identified our major supports. We have a major resistance between 30 and 28. We have a major support between 25.2 and 24.4, and a major support sitting at 19.2 and 18,000. This over here, this support right over here, is the most important support out of every single one of the supports we just labeled. It is a monumental amount more significant and important than the 25.2k level, as this support right over here represents the higher time frame POC level, which is point of control and major support for the bullish case for Bitcoin. If we lose this level over here, we will be officially heading to new lows. That would in turn destroy the 4-year cycle and could potentially push Bitcoin to brand new lows, guys. So what I've been saying this entire time, unless we lose this level, we have to assume we are on an uptrend, we have bottomed, and every correction that occurs is healthy. So when we discuss a correction today and we say we can potentially come down, note that this is still a healthy correction and the uptrend is still intact. Okay, guys? The uptrend or the healthiness of the correction only is lost when 19.2k is lost on the higher time frame. A loss of 19.2k is when we start to be worried about the higher time frames for Bitcoin in regards to continuations toward the upside and the triggering of the bull market eventually. So moving back to our smaller time frame, if we draw a measured move analysis, a measured move meaning the distance between a certain point of support and resistance on the pattern, every pattern has a different measured move. For a rising wedge, we'll take that first test to the second test and we draw to a potential breakdown point, assuming the breakdown point is over here. The measured move suggests a maximal pullback of $22,800. We're going to go ahead and draw that in really quickly, okay? 22,800 according to the measured move from the rising wedge. Now, measured moves do not always play out. I'm going to show you an example of why measured moves don't always play out, and another example of a measured move from a rising wedge that did not play out. So here we had a rising wedge formation. If I go ahead and remember this correctly, we had a rising wedge formation over here. This was a higher time frame rising wedge. If you remember this chart over here, we saw a pullback from the measured move. We didn't quite reach that entire target. In fact, we broke down and we didn't even reach the majority of the target, right? We came all the way down to 20,000. So 20,000 to 20,500 was a major support, if you remember. So what that means is measured moves don't always go to the last target measure move. They more or less predict a range of which the price can move towards, and it will generally stop when it reaches a major support level within that measured move range. So in this instance, although the measured move is targeting 22.8k, we know that the major support in that range is sitting at 25.2 to 24.4, and therefore we can say a maximal target of the breakdown from the wedge is actually going to be sitting within this range rather than where the measured move is taking us. So a breakdown of the 1 hour, or I would say a breakdown of the rising wedge, could result in a maximal price target of 24,400 as a pullback. Keep in mind, that would still put us in the bullish territory and would actually result in a retest, okay, of the 274-day neckline resistance we developed from June to March, okay? 276 days, my bad, okay? It would retest these local highs and retest these local highs before a continuation, a potential breakthrough. That is a real possibility and not a possibility that we are ignoring. Now, let's go ahead and talk on an even smaller time frame. If the breakdown does occur, what would our shorter time frame targets be? So to do so, let's take a look at our visible range volume profile. We can see on the VRPV a loss of 22,300. According to the VRPV, would be a technical loss of minor support. We can expect a continuation downwards from that point, moving towards these gaps in the VIPV, which represent support zones. So we're looking for these local high and low points, okay? Local highs right over here, local low points. This will bring us to around 26,800 to 26,900. We can do exactly the same thing on the lower levels, looking for these little gaps in the VIPV. Again, we can see these levels represent local high and low points right over here. The local high on the 15th of March representing the first top of that rising wedge, and of course a local low over here before that next continuation upwards, and of course a loss of that level can take us towards this major support. So our three targets if the rising wedge breakdown would be 26.8 to 26.9 would be 26.3 to 26.2, and of course 25.2 to 24.4. Let's go ahead and take a look at some technicals now and discuss the probability of a breakdown, and the fact of the matter is, the reality that this is actually a rising wedge, and we can talk about the momentum and the probabilities of that breakdown. So bringing up some technical indicators, what we can see over here, guys, is on the hourly chart we'll start off with. We can see a very, very clear bearish divergence playing out. We actually had a bearish divergence with deviation. We can see our downtrending resistance, okay, our downtrending trend line here on the RSI representing overall decreasing momentum. And what I like to do sometimes is actually just attach an arrow to it so you can see that downtrend, okay? And we have a rising price occur, so rising price action, decreasing momentum. That is a bearish divergence. It represents a discrepancy between the leading indicator, which is momentum, and the price action. It generally suggests the price is moving against momentum, and it is exhausting. It is exhausting. It is losing momentum, losing speed, losing volume, losing buying pressure, and that can signal potential reversals if we lose uptrends. Generally, when we have decreasing momentum upon a breakdown of a uptrend, which of course is going to be this uptrend, it does signify a greater probability of a pullback occurring rather than a continuation. So I'd be looking for a breakdown or loss of this uptrending support line. I'd ideally be looking for two things. Number one, an hourly close below. Number two, something that may not occur, which is a breakdown and push up / retest or break in rejection, and then loss of that low for a confirmation of an entry for a short, targeting those lower levels, guys. So currently RSI is looking quite bearish, and we can extend that to a 2-hour chart. We're going to see the same thing. As we can see, bearish divergence. We can extend that to a 3-hour chart. We can see the same thing, bearish divergence, and we can extend that to a 4-hour chart. We can see exactly the same thing. Bearish divergences are starting to pop up at resistance, and therefore the probability of a pullback is starting to build. Let's go ahead and take a look at a few other technical indicators, guys. So we'll go ahead and get rid of that. Let's go ahead and take a look at the MACD and the market cipher B. So MACD and market cipher B, starting on a higher time frame, we'll start on the 12-hour chart. We can see on the MACD we already have been having decreasing positive momentum. Really quickly, a little crash course on the MACD. We have two phases. We have bearish momentum or negative momentum, a better word for it, which is the red. We have bullish momentum or positive momentum, which is the green, okay? Our moving averages represent the shift between positive and bearish momentum. Our volume candles over here represent the strength of the current momentum. If we have a bright green, okay, it indicates a strong positive momentum occurred within that period. If we have decreasing green, okay, lightening green on a downtrend, it signifies that the positive momentum and we do currently have is starting to weaken. We have decreasing positive momentum as time goes along. Again, this represents weakness in the trend. It represents potential pullbacks or potential reversals. We can see this occur a lot on the charts before we start to see actual breakdowns, such as over here. We had decreasing momentum since this point over here, and the momentum actually only flipped negative at this point, and we did this extended breakdown until again we flipped into positive momentum over here. So we can see that the momentum indicators are effective at predicting price action as they are leading indicators. Looking at the market cipher B, it does more or less tell you the same thing. If you can look at the market cipher B, it's a little bit faster than the MACD. It is a slightly more leading. As you can see, these green dots, they indicate points of which the momentum has flipped. So generally over here, a green dot will print. That signifies obviously bearish momentum because we are under the midline. So we have negative momentum here, okay? We have positive momentum here. If we have downtrending momentum, we have strong negative momentum, okay? If we have uptrending momentum, in this downtrend area, we have weakening negative momentum. If we print a green dot, it signifies a shift between strong negative to weakening negative. If we have a break over the 0 point, it signifies a shift from negative to positive. As you can see, we are technically in the positive range here, but looking at the MACD, we do have convergence towards the downside. If we drop down to a smaller time frame, we can see we are starting to lose that strength. We are printing red dots. We are slightly pointing downwards. If we go to an even smaller time frame, you're going to see that exacerbated over here. Again, bearish divergence is printing, and on the hourly, you can see it even more, guys. We are starting to lose that positive momentum. So a probability for a breakdown is incredibly likely here, but this is the thing, guys. While we are in an uptrend, the uptrend remains intact and potential bounces are definitely possible. So what I mean by that is, while we remain within this rising wedge formation, a potential bounce upwards to retest the top again can actually still occur. In fact, we can push upwards and have a liquidation wick and then break back down. But the point of the matter is, this uptrending support represents the uptrend Bitcoin has been developing or within now for the last 9 days. And if this uptrend breaks, the trend will correct and move toward the downside before healthily correcting and moving back towards the upside, guys. So do not sit here with your bias, with your cognitive bias. I have a lot of spot Bitcoin, guys. I have spot Bitcoin since 16.5K. If anyone wants Bitcoin to go up, it is me. But I'm looking at the charts objectively. I'm saying at resistance, we are at resistance. Momentum's falling. We're in a bearish structure. The probability for a pullback is high. I'm not going to sit here and lead myself down an alley of despair because I am not going to accept the facts what they are and just be ignorant in my beliefs that Bitcoin will only just go to the moon because some dude on Twitter said it's going to $1 million. It's not going to happen, okay? Bitcoin is at resistance. If we reject here, it is not going to be unexpected. It is going to be a completely expected rejection. If we push through this resistance range, we already know what to expect, guys. If we break through 30,000, we're looking for a monthly candle close, okay? A monthly candle close to confirm that. Until then, the uptrend is intact. Bitcoin on the higher time frame looks absolutely fantastic, guys, but on the smaller time frame, we're talking about what we're here talking about is the distance between 28 to 25.2K. We're not talking about anything else. We're talking about the distance between 28 to 25.2K. What is going to occur between this range? Everything else in this video doesn't matter. We're not talking about anything else. We don't care about anything else. This is what we're discussing. So don't think, oh, wow, you think this, you think that. No, I'm talking about the current range of price action. That is what we're focusing on. If you can't tune into that, guys, you're going to end up, again, holding through periods that you shouldn't be holding through, and you're going to be buying times you shouldn't be buying, and you're going to be selling times you shouldn't be selling. Look at all the people who bought the top of Bitcoin and didn't sell until it crashed all the way down. Doing short-term analysis, doing analysis on structures is incredibly important so you can time the best entries and best exit for your position. If you're going to ignore it, you're going to end up getting wrecked. Sooner or later, it will happen eventually. Do not ignore the data. Trust the data. Put yourself with the probabilities. If the probabilities work out in your favor, congratulations. If they don't, it doesn't matter because you're going to continuously put yourself in a statistical probability. And over a long period of time, whether it be a month, whether it be 2 months, whether it be 2 weeks, or it be 10 years, you're going to turn profit if you are constantly putting yourself in the position of statistical probabilities based on the price action, okay, and the technical data. Price action and technical data. So I think with that being said, guys, I'm going to go ahead and end off the video. I hope you enjoyed today's video. I hope you learned something. Be very cautious about this price zone. Keep your eyes on it. This is not something to be fading. A lot of people are getting uber bullish here, guys. And you know, we've been bullish since 16.5K. We don't walk around saying we're bullish every single day because we've already bought our Bitcoin. We've already talked about buying Bitcoin. We don't need to say Bitcoin is going to the moon. We don't need to say Bitcoin's bullish. So we already know that. It's objective fact on this channel. But we are looking for pullbacks. We are looking for rejections. We are looking for points that could benefit us to either accumulate more or get better entries. We're not here talking about Bitcoin's going to the moon, but it's not going to benefit anyone knowing that information. We're here trying to push you guys to become better traders, learn and get these entries that we'll be looking for, and actually understand the price action so you can make good decisions yourself. Because watching someone talk about how Bitcoin's going to $1 million or going to 50,000 or whatever is completely, utterly useless for you, rather than stroking your own cognitive biases, which absolutely do not even matter, because regardless how confident you are in the market doesn't care less about how confident you are, guys. It doesn't matter. Before we end off, I'm going to show you one more thing just to enlighten your views of cognitive biases in the market and how biases can affect your decision making. Let's go ahead and do something which we don't do often, which is inverting the chart. Look at this chart, guys. What do you call that pattern? You call that a falling wedge. What are falling wedges? They are bullish. What does that mean? Probability for a continuation upwards here is likely. Where would your target be? The next major resistance. If you flip the chart, your decision could change. If you expect the price to go up here and you expect the price to go up here, you have a cognitive bias. You have a bias towards a direction. One direction you have a bias towards. Fix your biases. If you expect the price to go down looking at this pattern, and you look at this chart here and you expect it to go up. Therefore, you are looking at the chart from a logical perspective, from a data-driven perspective, without emotion, guys. You're doing it correctly. If you flip a chart and your bias changes, you do have a bias. It's a great way to identify subconscious biases or even conscious biases. So a lot of people have biases which they aren't even aware of. Okay, they're called subconscious biases. They're cognitive biases that you develop based around what you want to see on a subconscious level, and sometimes your brain kind of mixes and fits and cherry picks patterns and data to help kind of support your bias without even actively doing it. And it's very, very common with new investors. They'll make Elliott waves, they'll make market structures and patterns. They'll try to fit the price to a structure they want to see for the price to move in the direction, or to confirm or validate a potential move in the direction they want to see, rather than actually fitting the structure to the price, or vice versa, to actually show where the price is going, rather than just fitting it to see how they want to see it. Anyway, I'm talking too much, guys. Go ahead and join the Crypto Academy. We teach you everything here: market structures, candlesticks, patterns, indicators, technical indicators, teach you how to trade, teach you how to find trades, risk analysis, risk management, emotional control, psychology of trading, everything. Contact us, and I'll see you guys tomorrow. Thanks.